Hey there, my name is John Stevenson. Welcome to the Guaranteed Retirement Guy Show. Today we're going to be comparing whether or not you should buy an annuity for passive income or real estate for passive income. Which is better? So I love both. I love real estate and I love annuities, and they both can serve the same purpose. You just have to decide which one you are willing to live with or which one serves you better, depending on your lifestyle and depending on the type of retirement that you want, your tax situation, everything, all of that varies. But let's dive into it because I want to show you what these annuities are paying out right now. I want to compare them and I want to talk about the different investment strategies that you can use for real estate. And you certainly, those are great and you can use those for a lot of different reasons. I mean, having just an LLC that owns these and be able to run expenses through it and be able to have depreciation, that's nice too. All of that is nice. And so annuities are a little bit more straightforward, a little bit more simple, and a lot of people prefer those because they just don't have to do anything. It's true passive income. You don't have to do anything. And a lot of times the returns on those can be even better than a real estate portfolio, depending on how you structure it. Okay. So let's take a look. I'm going to share my screen. We're going to explore this. This will hopefully give you some clarity as you kind of try to decide whether or not you should keep your real estate portfolio or whether or not you should invest your money into more real estate or some real estate, maybe a rental, or buy an annuity. You just have to decide what is best for you. Okay. And I'm happy to help. If you're looking to purchase an annuity, book a call. There's a link below this video. I'd love to help you. Otherwise, go to my website, johnstevenson.com, and book a call there. So you can check my annuity calculators there and see exactly what the payouts are. And then you can compare and see, does this work financially for me versus maybe this real estate investment over here that I would like to get into. So just really depends on what you're looking for. All right. So I'm sharing my screen. I wanted you to see someone with $500,000 and they are looking to defer it for 10 years. So they're purchasing an annuity. They want to have guaranteed income. And you can see the income is substantial. It's like $80,000 a year, depending on which carrier you decide to choose. Okay. And you can choose, Equitrust is good. They've been around for a while. I've got clients that are with them that are doing great. I've got ClearSpring. They've been, 50 years old. It used to be Guggenheim, good company as well. Then you've got Midland, 119 years old. North American, 126 years old. And all the rest of these carriers. There's a lot of good options here. But let's just say, all right, that's our baseline, $80,000. Now, you can buy a building, maybe a commercial building and get some rent from that. And you can get it right now, right? And you can let it appreciate and get rent later or raise rent. You can, obviously, if you're looking to buy a building and take income right now, then you might want to look at what it would pay you right now. So if we looked at that, let me just compare that. And this is someone who's 55. So the payout on the annuity is going to be a little bit less. It's going to be a lot less just because they're a lot younger and the insurance company is on the hook. But ask yourself, can your real estate investment deliver enough passive income to make it worth? Okay. So if you look at the annuity, it's $33,000 a year. Okay. If you compare that with a $500,000 investment into real estate, like where I live by Lake Tahoe. A $500,000 house here is like a 1,200 square foot house. Okay. And the rent you can get from that is maybe $2,000 a month. That's base. And that's if it's in decent condition. Okay. $2,000 a month. It's $24,000 a year. If I, take care of that myself, it's paid free and clear. Then yes, I got costs of I've got the insurance costs, I've got the taxes, and maybe everything's so perfect. Maybe all the appliances are brand new. I don't have to worry about replacing them or working on them. Okay. Let's just make this best case scenario for real estate. We all know that that's usually not the case. I've had rentals before and I've had to pay for a lot of upkeep on them. Okay. But let's just say you don't have to, let's say it's just taxes and insurance. Okay. Well, taxes and insurance, here in the Tahoe area on that house, if it's in a neighborhood, it's not in the trees, right? You're not dealing with fire insurance. Then you're paying $200 a month maybe between the two of those. Let's just say maybe it's a little bit more, but let's just keep it simple. So $1,800 per month is your net income because you're taking the rent. You're not paying a property manager, okay? Because if you are paying a property manager, then you need to deduct probably another 10% off that. So it's like $1,600. So anyways, let's just say it's the best case scenario. Let's say you've got a property manager who is your friend and they're not charging you anything. Okay. I want to make this the best, put real estate in the best light possible if I'm comparing with an annuity. Okay. So $1,800 a month. That is my net income. Okay. Times 12, that's $21,600 per year. Now, but let's say you also have a decent amount of depreciation. Depending on how you depreciate it, maybe that takes off, and depending on what your tax bracket is, and this can be all over the place. Let's say you have depreciation, I don't know. I'm not a tax attorney, but let's say it's spread out over 30 years, okay? So 30 years, you'll save $500,000. Let's say you got $16,000 in depreciation. Let's say you're in the tax bracket of 20%, okay? Well, if you got $16,000 that's being written off of your income, then 20%, that's $3,200 that you're not paying in taxes, okay? So that's pretty good. So $3,200 a year. So $3,200 divided by 12, that's $266 per month in extra net to you because of the depreciation. So $266 plus $1,800, that is $2,066 per month times 12. So your true net from your real estate is $24,800 per year. Okay. And you own the asset. I didn't even bring that up, right? You own the asset. You can sell it later on if you want. Okay. Now I sell annuities, so it's almost like I'm selling it into just doing real estate. But let's just bear with me here. We're gonna kind of compare the two and see if it's worth it. Okay. So you got $24,800, okay, versus a $33,000. And we're talking someone who's 55. If you're 60 years old or 62, it's even higher. Okay. So $33,000. I mean, that's quite a difference. Okay. I guess here's what you got to do. You got to do the math yourself and say, all right, is it worth it for me to net, okay, an extra $9,000 or whatever, on my annuity contract, and not have something that's depreciating, not have real estate that's depreciating, but and at the same time have an insurance contract. I'm going to share my screen here. I want you to see what I'm talking about. I have an insurance contract that's also depleting in value. I can't sell it later. Okay. Look at these numbers here. Even with interest growth, okay, in this account, you're getting $33,000 for the rest of your life, which is great, but you can see that account balance will be gone by the time you are 75. Okay. It's gone. You have nothing to sell. So in 20 years, you can't sell an asset and take that and do something else with it, right? But at the same time, how much time have you spent taking care of that asset? How much time have you spent just trying to get your rent? Or what about when you lose that renter and then you got a couple of months where you're fixing the property up again and then you're relisting it? You lose those months of rent and then any possible repair costs, okay? That's what you have to think about. So is it worth it? Like, is this the retirement that you've always dreamed about working? Because pretty much what you're doing is you just have another job. Okay. Yeah, it is passive income in a way, but you still have to do something. And if you have a property manager taking care of it for you, great. That will definitely take some stuff off your hands, but they're still emailing you asking, hey, this broke or this broke. We're going to get these bids and you got to pay this and this and this. Like, it's still somewhat active. Okay. It's not completely passive in my opinion. So yes, there are depreciation benefits. Yes, there are certain things that, it's nice to have a hard asset that you can sell later on. But I've had people with real estate sell all of it just to buy an annuity because they're like, I've enjoyed real estate. I've enjoyed working. I've enjoyed my investments over here, but I want to enjoy my life. I want to enjoy my retirement. Okay. I want to retire. That is the whole reason for retirement, is to stop working. Okay, it's to stop doing the regular, unless you absolutely love real estate and you want to keep doing that, then there's nothing wrong with that. But if you want to travel, you want to spend time with grandkids, you want to pursue new hobbies, new career, new something, okay, this allows you to do it 100%, where you don't have to sit there and manage something actively. So again, and I'm voting for annuities at this point. I love real estate. I own real estate, okay? But I love annuities because you can literally put your money in, you can have guaranteed income, the end. Okay. It continues for the rest of your life. It hits your bank account each month. There is nothing to do. Okay. And if you get a bunch of these, especially if you're older, I'll show you here. Let me show you real quick. So if I go into here and I say, you know what, I've got $33,250, but I'm not 55. Okay. I'm 62. I'm 62 and I have the same question, John. I have 62, I'm 62 years old. I got $500,000. I want to have as much income as possible. Okay. Well, we already know that this property We already broke down the numbers. Okay. It's giving you what? $25,000, $26,000 a year. Great. Okay. You're getting that for the rest, for the rest of your life. Pretty much you keep renters in there. Now you compare it to something else, it's immediate payout at 62 from 500 grand is like 36,850 for the rest of your life. You don't have to do anything, nothing. Okay. That's nice. There's a lot of value in that. And so, if you put in $1 million, maybe a property here in Tahoe, if I buy a property here, I would do better with a residential property, and I would probably get $3,500 per month. Just to be completely honest, I get $3,500 a month. Okay. That is, that's pretty good, right? But you look at this, I can get for $1 million with an annuity contract forever, $73,000 a year. If I look at that monthly, that's $61.42. I don't have to do anything. Yes, it will deplete after 20 years. That $1 million will be gone, but I bought a pension. That's what I did. I bought a life. I bought time for myself. Time I can't get back. I've said this and I mentioned this in my other videos that people should read the Die with Zero book. It's a good book, and it's a good perspective because it just kind of talks about, are you going to use your money and just keep accumulating forever and work all these years for someone else? Because, if you die with several million at the end, then just kind of look at your most productive years and say, if you were making 200 grand a year and you left 2 million behind, then that's the equivalent of working 10 years for free. Okay. So yes, you retired at 62, but you really worked from 52 to 62 just to pay someone else. Nothing wrong with paying your kids and grandkids and charities and things like that. But guess what? They get the money when you're really old, and then they're already older, and they could have used that money earlier. So the argument is spend your money now, enjoy it now, help your kids now, help others now, instead of having them have to wait until you die to be able to have those funds. Okay. It's usually better, and the statistics show that they need it more when they're young versus when they're older and they're more established. So just have a hard look at your assets and your plan and think, all right, it might not be real estate. Maybe it's stock. Maybe you love being in the game, and I like it too. It's nice to have the growth. Why not have both? Okay. Why not have some money in stocks or real estate or whatever? If you enjoy doing that, then have some money in there, but then have enough money in annuity contracts to give you a guaranteed pension that never stops. So if you want to stop doing your other investments, you can. Okay. If your investments go down, the market crashes, either the housing or the stock market or bond market or whatever. Okay. It doesn't matter because you've got your annuity contracts taking care of you. You've got the income coming in. If you want to take that trip to Thailand or to Australia or Italy or wherever, and if you want to hang out there for longer than 3 months because expats are required to have an annuity to live there, you can do that. Okay, there's so much that you can do with these that you cannot do with other types of investments. And so that's why I share my screen all the time on my videos. I'm always sharing, here's what you can do. Here's what this amount will do. Here's what this will do. Okay. If you're joint, if you want a joint payout, here's what it is here. I mean, everyone's situation is different, but I would just invite you, before you make any decisions with your money, check out what's available. Okay. See if passive income, true passive income from an annuity works for you. It's not a growth strategy. You're not going to get rich from it, but you're going to enjoy the wealth that you spent so much time growing. Okay. At some point, you've got to enjoy it. Otherwise, you're just working and growing it for someone else. So why not enjoy it and be able to use that to help someone right now too? So that's just kind of my plug on that. But I'd love to help you buy an annuity. If you're looking to purchase, I'd love to help you, but I'm not going to sit here and try to sell you something that you don't need. But if you are looking to purchase and you are looking for, some advice from someone who is transparent, who's willing to show you everything that's available. Okay. Some of these commissions on these are low and some of these are high. It just depends on the carrier you're choosing the product, but I want you to see what's available and then you can choose what's best for you. So it's not me trying to shove a product down your throat. It's not you talking to an advisor who's trying to sell something for a high commission so he can get a trip or whatever, or what his broker dealer allows him to sell. It's you doing the best thing for you and for the money that you spent a lifetime saving. And so that's what I would recommend. Go to my website, check out my annuity calculators, see what's available. And then if you feel comfortable, you can book a call right there on the website with me as well. So I'm happy to help. I'd love to help you if that's what you're looking for. Again, if you like the video, make sure you click the like button, subscribe, share, comment below. I'm happy to help. And I do appreciate you. and we'll see you next time.